Good morning. How's everybody doing on this Fed week? Good, bad. Hopefully your trading week was going okay. Mine's going pretty well. Closing a lot of stuff in capital gains. But what's the biggest story this week? Fed. Now, here's a couple of things I found odd about the Fed. Here, let's take a look. A couple of things that just don't make a lot of sense. There we go. All right. So a couple of things here. All right. I got another alert. Oh, nuclear stocks are starting to rip. Rip. How can we serve you this morning? Yeah, Alicia had a nice trade in small account challenge, SRV. That's almost a double. All right, so let's look at a couple of things. Gold. All right. So we had the Fed FOMC was here. We had a brief pop, and now we're starting back. I'm just asking anybody. Has anything changed in the gold picture except for a sell the news event on Wednesday, do you think? I don't think so. I think you still want to lean long gold. Just me. Just me. I think we've got confirmation. The Fed, so basically the big event of the week, the Fed laid out they are likely going to lower rates, right? They're likely going to lower rates. A lot happened on Wednesday was a sell the news. The Fed did exactly, right? Will, what did we close in capital gains? You can always look at the portfolio, Will, and see what we closed. Oh my gosh. Rough business running these products for people. We closed yesterday. Sorry, I'm being sidetracked by the chat. So anyway, gold, I believe, will take off again. Did we get a move? The second thing, all week long, we discussed how much how much would the S&P 500 move? And we got it. Here, take a look. Stealthiest move ever. So once the Fed announced what they were going to do, we traded as low as 654, and by the peak yesterday, we were at 664. Do you remember we had at least people in Rip Zone, and we had discussed the Fed was likely, or the market was likely underpricing how much the market would move. We did get a 10-point move. The straddle that closed today was priced at $8 on Wednesday. So just to let you know, the market still did make a move. And right now we're sitting here sort of waiting for things to happen. Also, don't forget today that SPY goes XD, which means if SPX is up on the day, SPY is still going to show down by $1.83. And this is my sister's golf club in Colorado. So remember that when a stock goes XD, the stock price is going to drop by the value of the dividend. So nothing has really changed in SPY except there's a dollar, $1.83 less in the product. Oh, XD stands for X dividend, and it's actually EXD. So today, actually, the market's up a little bit, but we are getting a very muted move today, and that's what I want to talk about today. Okay, that's what I want to talk about today. Let's see here. I want this on here. There we go. So again, my favorite trade of the week so far has been my weekly profit cycle strangle. Sold a call yesterday. It worked out. It's worked out so far, but I'm waiting for VIX to move. What I want to talk about now is something called 9-day VIX. So how many people have heard of 9-day VIX? Like, why? Why do you care? Why do you want to know? And I'll explain. So you go to your platform. Let's look at the last 20 days. All right. This is probably one of the better leading indicators that you can find. A lot of you, maybe none of you, follow VIX at all, which is perfectly fine. But VIX is telling you what the market thinks. VIX is a 30-day volatility indicator for the S&P 500. You can think of it as, okay, VIX is the at-the-money volatility for the SPX 30 days out. That's what it is. Okay. Now, 9-day VIX is the at-the-money volatility 9 days out. Okay. So what this is now, the thing that is the most important on this is the touchiest part of what traders think the price signal is. The simplest thing I can give you here is, in general, VIX 9-day declining is bullish. In general. VIX 9-day advancing or going up is bearish SPX, is bullish SPX. Now, let's take a little look, see what's going on here today. Basically, right? So this was Friday last week. We had a low. Peak of the volatility was probably the low of the market on Wednesday after Powell spoke. And then right after, everything collapsed and the market SPX went up 100 points basically from this point to this point yesterday. VIX 9 days started to go up and the rally died. Now all of a sudden, what do we have? We're sitting here trying to decide what to do. Sitting here trying to decide what to do. And that's, I would say, where we find ourselves right now. The market is sitting at an all-time high and it can't decide what to do. One of the reasons why VIX is not dropping, regular VIX is not dropping, but the next thing you want to keep an eye on is the spread between VIX and 9-day VIX. All right, so let's do a couple things here. Right, with the Fed, right, with the FOMC done, with the tariff thing, I guess Trump and Xi are meeting. I think that's part of the reason why volatility is kind of stuck where it is right now. There aren't a whole lot of things on the horizon until earnings. So for the next 2 weeks, volatility should be going down. I would say here a normal spread between the two should be around $1.50. Let me get this up here. Okay, right around here. Now let's take a look at where it is right now. So here, I want you to see where this comes from. So right now we are looking at, we have a 9-day VIX of 1315 and VIX is trading around 1573. I would say that's a relatively normal area for it to be. And then you're going to ask, why is that? And the reason why is when you go out here, when you look at option prices in the, this is around the 30th, what's today? This 19th. So your option prices expiring in 9 days are right around a 9 to 10 volatility, right around there, about a 10 volatility. All the volatilities in the short term are way lower than the volatilities in the long term right now. And when I'm saying long term, I'm basically saying 30 days. Now, if you're trading, let's say you're trading, put yourself in the market maker's shoes. If you didn't think we were going to get a lot of action, would you want to spend a lot of money on short-term options? Put yourself so you're making markets, right? So I did that for a very long time when I was a little more young, or younger than I am now. Although I would go back to do it now if it was still live floor trading. I'd go back in a heartbeat. However, if you don't think anything's going on, do you want to spend a lot on option prices? Just think of it that way. If you don't think anything's going on, you don't want to spend a lot on option prices. That's generally a more bullish indicator, right? Because all of a sudden, if you're starting to worry about the market moving, or you think the market's going to move, you're going to bid prices up. But if you don't think the market's going to move a whole lot, you're not going to bid prices up. Does everybody kind of see that? So. Now, what's the thing retail likes to do a lot? How many people own stocks and sell calls here? Raise your hand. Anybody own stocks and sell calls? Institutions, pension funds. How do pension funds pay their bills? Okay. How many people in here like to sell puts to buy stock at a lower price? Who do you think buys those options? Well, I used to, right? I used to, but the market maker buys them. Now, in this room, there's 230 people. There's probably only 5 market maker firms, 5 to 7 market maker firms, plus some small independent providers providing liquidity. The whole rest of the world that invests wants to come in and sell options to people trading Apple, Tesla, right? That community is relatively small. They're going to be sensitive to what you guys retail are doing, right? That's what I used to do. That's what Leisha used to do. Hans used to do. Mark used to do. You're sensitive to what's going on. So there was a question here about expectations. Who's setting the expectations for the market maker? Are they doing it? Sometimes they can press it, but who's setting the expectation for the market maker? You are. You are. So what they're doing is they're taking the sum total of everybody's opinion, and that sum total is going to be in the VIX and the VIX 9-day. That's where all market opinion goes. Is that crazy or what? So if you want to see what everybody's thinking, that's where you look. Because that indicator will run on a different sensitivity than just the SPY going up. Right? You want to see dropping VIX and dropping 9-day volatility in general. If you're bullish, right? Those things tend to go together. So what I like to see is, right, I want to see VIX 9-day dropping below, and it can keep going. This spread can go 2, 3, 4 points. It can keep dropping and dropping and dropping. But it generally, 4 points, I think, is probably the max that I have seen. I'd have to think about it, but I think 4 points is about the max. All right, and then when VIX is greater than VIX 9-day, okay, is greater than VIX, expect. So here you go. These are the little clues. Okay. Now, right into the Fed, literally right in the FOMC meeting. Okay. Oh, actually, let me see here. There we go. Okay, there we go. 9-day VIX and VIX were both right around 16.5 going into the FOMC. We had a 10-point snap move. Right now, 9-day VIX is trading at around 13.5. VIX is around almost 16. Again, I'm expecting stocks to rise. Everything I'm going to do, I'm going to lean a little long. Once VIX 9 days starts to go over VIX again, it's going to be, your ride gets bumpy. It gets bumpy very fast. Because all of a sudden, everybody in here is changing their opinion about what's going on. They're coming after the short-term options. Options that folks like to sell because they think it's free and easy money. They're changing their opinion, and now all of a sudden they're buying short-term options that decay very, very fast. It's a total change. Now, expected move. All right. What do the numbers mean? When you see a 9-day VIX at 16, SPY is moving 1% a day expected. When you see a 9-day VIX at 24, expect SPY to move 1.5% per day. When you see VIX trading a 9-day VIX at 32, expect 2% per day in SPY. Right. So if you're trading, expect that. So when I set trades up, when I set up trades for weekly profit cycles, for Rip Zone, for my pros, capital gains, I'm going to be mindful that that's what we expect for the broad market. Now, here's another thing for you today. VIX is trading 1569. Does the move we have look anything like 1% today? Is the way VIX is pricing anywhere close to how we're actually moving today? No. So right now, anybody holding options is paying a lot of decay for those options. Very hard to make money. And the more days now that we go, 1, 2, 3, 4 without a move, I expect VIX to drop. Now, this has actually been a symptom for this market for the last 2 or 3 months, where volatility has been relatively high. 9-day VIX is too high. If you're buying short-term options, right? If you're buying options in SPY, 10 days in and out, you have to have a very quick trigger on those because they're decaying super fast. At a 13 VIX, we're almost priced at double where SPY is actually, or SPX is actually going right now. That makes it very, very hard to make money buying options. And that's when volatility comes down. And people are saying Trump can change this with one tweet. He certainly can, right? He can say, hey, I want nuclear power, right? I'm going to strike a deal with the Chinese. If he strikes a deal with China, where do you think stocks go? Right? They're going to moonshot. Moonshot. Right? So again, I think the market is waiting for this kind of information. So again, from a trade point of view, so James H is saying, should we be selling options instead of buying now? Excuse me. What I would say is, I think you want to be short VIX right now. I think you want to be short VIX right now. Now you can do that. You can join weekly profit cycles. If you like talking about this stuff, if you like trading this stuff, if you want to put trades on every week, go to weekly profit cycles. And you can learn how to do it. And not only that, for everybody in here today, we are going to send you a copy of this. So I'm going to send you my little printout of how to use the 9-day VIX in your trading, just for showing up in here today, because I appreciate it. So this is about 6 or 7 pages laying out all the details of what's going on. So again, if you want to learn how to trade Trump's tweets, be set up for the tweets, right? Check out weekly profit cycles. So all of you guys are going to get this in the send from today's video. Okay, so go to the top, click and join if you want to learn how to trade this, trade volatility, learn to use volatility in your trading. I do all the trades myself. So kind of like Leisha in the small account challenge. Actually, I do it on all our products, but I trade all the stuff that I put out. And some of my students get better prices than me, and it's very aggravating, but I'm glad they do. Anyway, so this is coming out to you. Check weekly profit cycles on top, click the box, and you're going to get this handy dandy guide to 9-day VIX, how it can help you and what to look for. All right. It is now around 10:30. Any questions? Somebody asked if you're going to get a copy of this. And yes. What do I think? I like puts and VIX. That's all I'm going to say. I like them. I own a ton of them. But I've also got a little bit of a hedge. All right, everybody, it's 10:30. State of the market is now complete. You have your indicator. You've got my idea. Thank you for coming to Option Pit in the State of the Market. We appreciate it. There is more good stuff coming next week. Don't forget, Ticker Highlight Show on Mondays. This document will be emailed to everybody with the replay. All right, guys, have an excellent weekend. The weather right now is beautiful in Maine, and so far I still have all my chickens, and I'll write about that this weekend. Yeah, the Ticker Highlight Show Walmart trade was pretty great, I have to admit. That's Leisha again. She does a good job. Leisha and Mark. All right, guys, have an excellent day, and thank you for coming. You'll get this soon. Bye-bye.